Hey everyone, Couch Investor back to another video for today. So yes, I'm back with another Netflix video. I know it's not very popular here on YouTube, but I do think that it will become much more popular when the stock is back up to where it was before and everybody is going to FOMO into it. But let's talk about the recent changes because the stock is up 40% since its 52-week lows. So it has been going up for one reason and one reason only, and that is obviously the ad-supported tiers. So we had some upgrades from some analysts, which we're going to touch on in a bit. But if you want to support me and this channel to pay for my Netflix subscription and not get any ads, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and make sure to check out all the other links in the pinned comment. So we had an upgrade from an analyst at Oppenheimer that basically said the analyst Jason upgraded Netflix to outperform from perform with a $325 price target after assuming coverage of the name. The company's advertising tier launch should accelerate subscriber growth, drive average revenue per user or ARPU, and slow churn. As we've seen in the last 2 quarters, churn is an issue and adding new subscribers is also an issue, especially in the current market environment. The analyst tells investors in a research note, Netflix is in a unique position to aggregate large audiences and control the timing of series launches for top-tier advertisers, commanding high CPMs, which we're going to talk about it later in this video. In 2025, he forecast global advertising revenue of $4.6 billion, driving total revenue to $42.4 billion, with 282 million total subscribers, both of which 3 and 6% above street estimates. He adds that despite recent headwinds, Netflix still has the highest viewership in the industry as streaming continues to take share from linear TV. And I obviously agree with him. I think an ad-supported tier was a must. It's going to add a lot of new subscribers. And like he said, it's going to slow down churn. Because why do people churn? 1, maybe they don't like what they see. But 2, it's because, well, they're paying for something and maybe it's expensive because in the United States, I think it's what now, $15 or so, maybe even more. It's expensive if you don't like what you see, or maybe right now in the high inflationary market, you want to cut down costs. So you will cut down your Netflix subscription. If it's, well, maybe half that price, because it is ad-supported, maybe you will be less likely to churn. Just an idea. And again, every other big streaming platform will have ads eventually, because why not? Now, last week, we also had another price target boost from Citigroup. So there, the price target went from $275 to $305 per share, and this analyst estimates that an ad tier will add about 65 million global subscribers. It says here Netflix doesn't have a natural shareholder base, it's not adding subs, so it's not a growth stock. It doesn't have a lot of cash flow, so it's not a value stock. But if 65 million new customers sign up, we could go back into growth mode. I think we can all agree with that statement. He continues by saying that the trepidation on the part of the buy side is that it's going to take too long, noting it will likely take over a year until investors start to see the full benefits of advertising. Of course, if it's only going to come into play later this year, we're only going to see the effects of it, well, 12 months from now. Investors aren't that animated about it right now because that's a long time for a lot of the fast money funds. I look at it exactly the opposite. Now is actually the time to rebuy. As I said at the start of this video, a lot of people will get excited when they actually see the results, but maybe that might be too late. Netflix themselves estimate that its ad-supported tier will reach 40 million viewers by the end of next year, according to a recent report from the Wall Street Journal, which noted that executives at Netflix and its advertising partner, Microsoft, met with ad buyers in recent weeks. They say here, we are still in the early days of deciding how to launch a lower priced ad-supported tier and no decisions have been made. So this is all just speculations at this point. But we have a bit more to, well, get around that speculation, and that's the price per CPM. So apparently Netflix has requested ad buyers to submit initial bids next week with a soft $65 CPM, so cost per mil, cost per 1,000 impressions. This is Solomon's US major media CPM comparisons. So you can see that, well, a soft $65 is pretty premium. And to put it into more context, the Super Bowl 2019 and 2021 had a $55 to $65 CPM. A 30-second ad cost $5.5 to $6.5 million, reaching around 100 million people, which we know that Netflix has much more than that. Now, of course, that does not mean that all of those 200 and something million subscribers will watch the same thing at the same time, but I hope you know where I'm going with this. And then last thing I want to touch on is obviously valuation. So valuation has come down tremendously. If we look at EV to sales in the next 12 months, it's now at 3 times. If you look at the same quarter last year, it was more than double that. If you look at price to sales, 2.7 times. Last year, that was 7.4. So again, 3 times that much. So you can see that valuation has come down. Yes, again, the same story here as with UiPath. Financials, the company is growing much slower than before. It is losing some subscribers as well going out of the pandemic. But overall, I do think that Netflix has some growth ahead of it. And obviously that ad-supported tier is going to add a lot of value. Now, with ads coming to play, and this is just another speculation from my part, we've talked about that in the past. Once you add ads to your platform, why not add live sports? Live sports by Amazon, Apple is obviously driven by ad money, basically, right? As we've seen just before, CPM for the Super Bowl is extremely high, 30-second ad there, $5.5 to $6.5 million. So once Netflix adds that ad-supported tier, has a couple of years of experience, has a couple of years of tweaking, seeing what works best, maybe, I don't know, by the end of this decade, you might see some football, baseball, basketball, Formula One on Netflix because, well, why not, right? Sports is one of the best things to attract viewers, and it's basically what is still, well, linear TV is on live support thanks to live sports. There's no denying that. And so this is why I think Netflix stock is becoming much more interesting right now. Obviously, do share your thoughts down in the comments below. Buy, sell, hold. Let me know down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I see you all in the next one. Bye-bye.